right, welcome everyone. Thank you for attending another video podcast presentation. My name is Seewing from the Yi Real Estate Network, and my special guest is Miss Maureen McCann from Spartan Invest. She runs. She's a co-founder of a very successful turnkey real estate provider, and she has helped many out-of-state investors to buy cash flow investment properties in her neck of the woods. And her neck of the wood is, let me do a little bit of singing. Sweet home Alabama, where the skies are blue. Sweet home Alabama, Lord, I'm coming home to you. Leonard Skinner, one of my favorite bands back in 1970. Leonard Skinner. Okay.
I think you sound better than him.
No, I think I will keep my day job.
Okay.
All right, let's not digress any further. All right, Maureen, can you see the screen very well?
Mm-hmm.
All right, so what we can talk about for the next, hopefully less than 20 minutes is, well, epic. I predict there will be a second wave of migration pattern. It'll be very epic. Maureen, last week, you and I talked about this. So since we talked about it last week, I keep thinking, wow, that's, let's talk about it, because I have this intuition. I have this feeling. It's going to happen. Now, it's not just based on intuition and feeling. It's based on, my experience and knowledge over the past 20 years. And yours, you've been doing this for more than a decade in real estate investing, right? And you understand this is our, profession. So we guide real estate investors to buy the best real estate properties, and regardless of where they live and whatever. So what I'm trying to say is, I believe there's a second wave of migration patterns. So let's take a step back. What was the first wave? Okay, the first wave of a demographic shift, the first wave of epic migration was occurring right at the beginning of the pandemic in March 2020. Now, think about it. Even before the pandemic occurred, which changed the way we live and work and play and invest, whatever, that's without a doubt. Even before the pandemic, people has been migrating slowly but surely into certain areas of the U.S. Where they can have a better quality lifestyle, lower cost of living, home affordability, et cetera, to retire, those kind of things, right, Maureen?
Yes.
So for many years, people, physically, I live in San Francisco Bay Area, and I've been living here for 30 years. And I don't need to tell you what's going on in the real estate market over the past, decades, including the past few years. And you too, Maureen, you although you represent Alabama, Tennessee, whatever in your marketplace, you physically you live in Southern California. Similarly, with the real estate and the high cost of living, whatever associated with living in Southern California, very high real estate prices. That's been well documented. But the migration for many years of people, retirees, baby boomers, for example, they've been moving slowly for the last several decades. They've been moving from the Northeast, cold weather area, New York City, New Jersey, whatever, Boston, and the Midwest from Chicago, and then the Pacific Northwest, high cost areas such as Seattle, Washington, and whatever, and then of course the Western region, California mainly, right? And people moving away from high cost area, high tax area into lower cost, affordability, better lifestyle, so they can enjoy life better. So, and then since the pandemic has occurred, we see another epic migration because of the advent of you can work remotely anywhere you want. So people does not have to work physically where the company is located. So again, that wave of migration we have been seeing through that people, same thing. Since the pandemic has begun, a lot of people have left California and New York and other areas of the US. They are migrating mainly into the South and Southeast, right, Maureen?
100%.
Yeah, and the trophy, I call it the trophy markets where most people have been migrating to are, we've been hearing, the mainstream market like in Texas and Florida is a main, and maybe a little bit of North Carolina and Georgia, right? South and Southeast because it is a sun belt, right? Warm and happy and high quality lifestyle and low home costs, right? Real estate prices are very, very low price and quality of living, more space. People want to people can work remotely, so they might as well move to an area where the home prices are cheap, where they have more space. They can have an extra bedroom as a home office and larger backyard and 3-bedroom, 2-bath, single family home. That's ideal, shelter for most people. And a lot of people moving there for all those reasons. And then this past 2 years, the skyrocketing home prices, record-breaking, record, and skyrocketing home prices increases as a result of this migration, and then skyrocketing rent as well. And now, let me give you an example. Austin, for example, the median price inside Austin today, I believe, is $600,000, and that is mind-boggling because I've been promoting Austin for the past 10 years with one of my local consultant there, and the median price inside Austin 3 years ago, don't quote me, it's around 300,000, maybe 350. Now it has doubled in value in a mere 2 years since the pandemic began. Just one example. Another example is Miami. The skyrocketing home prices of all the migration, and parts of Florida also. Cape Coral, except Orlando, Jacksonville. I mean, home prices there were like $150,000, $200,000 a mere 2 years ago. Now it's like a single family home, a cookie cutter, three bath, 2 beds, like 1,400 square foot. In these markets, outside in San Antonio, outside Austin, Raleigh, Charlotte, North Carolina, Atlanta, Georgia, Jacksonville, Orlando, is like $350,000 to $400,000. I mean, the home prices have increased like 50% in the past 2 years, right, Maureen?
Yes. And what I was looking up as you were talking about that was when you go back to Austin and you said the median home price was $600,000. I just wanted to see what the average salary was in Austin, Texas right now. And it is, ZipRecruiter is saying that it's $24,000 to $61,000 a year. And that's for hourly rate. For entry level, it is up to $190,000 a year. So the ratios just don't work out from an affordability standpoint with your wages compared to housing prices.
Furthermore, very good point, Maureen. Furthermore, because of fast rising home prices and the skyrocketing rent, right? Since the eviction moratorium has expired in many areas of the U.S., the landlord are allowed to increase the rent exponentially, 10, 20, 30, 40, 50% rent increase. They're charging their renters, right? I mean, as a result, the skyrocketing rent and the skyrocketing housing prices, at the areas of the South and Southeast, they are pushing out those locals, the locals that are born and raised in this location, Texas, Florida, North Carolina. They are being priced out, right? They cannot afford to buy a home in these locations. They cannot afford to rent either. The locals are being priced out, and that is so sad, right? So it's amazing. the real estate landscape has changed so much, Maureen. You and I, we are in this business, right? We help investors to buy rental properties for cash flow, low price point in the best, fastest job growth and population growth in a country, right? I mean, we've been doing this for many, many years, right? You and I have the same business model, right?
Yep.
So I'm just saying, okay, the way I pride myself over the years into get ahead of the market, get in front of the wave. So look, and because you and I, we look at the real estate trends, you know, and metrics, everything else, you know, this is our full-time job, right? So I have no other reason to believe that we can see another second wave of migration, a second, third wave, and the migration, people feel so frustrated, they're being priced out to buy a home and to rent. They are moving to an area fairly close by, not that far away because of the advent of remote working capacity to a even more affordable market. I mean, whereby the median price of homes are no longer like 350, 400K, which exists in this once cheap market in Texas and Florida, and North Carolina and South Carolina and Georgia and what have you. So what's the, I believe, okay, you and I gonna backtrack a year from now, 2 years from now, we can go back to this video, right? And just review whether my intuition and is correct. I see the second migration of people moving far away. They don't want to move to the Midwest. Midwest is still very cheap prices, you know. They have not grown that much. We're talking not Michigan, Ohio, Indiana, Illinois, right? Or Missouri, right? Or upstate New York, whatever. People want to move like 200 miles away from Florida, 200 to 300 miles, right? Still close by, whereby you can catch a plane 1 hour, you can reach the destination, and you can drive, you know, 4 or 5 hours, you can reach. And the areas, I believe, people are going to your neck of the woods in Alabama, Tennessee, and northern Georgia. Your neck of the woods cover a big area. I don't know how many square miles. We're talking like, you know, 300-400 square miles. Alabama and Tennessee is looking right smack of the south and southwest corridor, the way I call it, not all the way up north where you're subject to cold weather on that stuff. You have mild weather. You're almost like sun belt, right? Almost sun belt. You know, you're right up here. You know, Alabama is right smack in the south, and Tennessee is right on the border between Midwest and South. So you are the hybrid market. So very accessible, right? You know, to go everywhere. You can, when people move here. And home, okay, in a few minutes, I'll leave it up to you. You know your market better than I, but all I know is Tennessee, Alabama is more affordable, at least for right now. If the median price of home is not 350, 400K anymore or higher, the median price of a home are 150,000 to 200, maybe 250,000. That is a good sweet spot, especially for real estate investors. Because if a real estate investors can buy an investment property in Alabama, Tennessee corridor for like 100 to 200,000 and get a rent for $1,000 monthly rent on $120,000 property, or $1,600 rent on a $220,000 property in your neck of the wood in Alabama, Tennessee. Hey, that's a win-win situation. That's a good return on investment, good cash flow, what have you. All right, so let me look at the map. Okay, hold on tight, Maureen. I know you're itching to talk. You're bubbling inside. You got so much you want to let out, but Seewing is
That's the floor. Go, baby, go.
Let me finish up, okay? I'm just giving you, Maureen, you know what I'm doing? I'm being as objective as I can, right? And I look at the future, right? I always look at down the road, right? What's in store for the future? When you invest when a real estate investor invests in Bali, they're not buying, yeah, they're buying for the current strategy, for, for current numbers, current cash flow, whatever, but they have to look at next 10 to 15 years. Is my investment, is my rental property going to grow over time? It's going to make me money. It's going to allow for me to achieve financial freedom. And giving the metric, giving the numerical metrics I see, as you can see here, even Nashville is growing very fast, but that's not affordable either. So people moving away from Nashville into the suburbs of Tennessee, and then people from Texas, Florida, and a few other places, they're gonna slowly migrate into this corridor, Alabama, Tennessee, and what have you. So with that in mind, and then we'll give you one more. So as we get closer, you see all the cities that your company is representing, selling turnkey properties. So let me see what else. Yeah, okay. So with that in mind, the floor is yours from the, so what are your thoughts in terms of what my high level thought process, and just bring it down to lower level and provides your perspective, because you are expert in this market, because your company sell investment homes in this Alabama, Tennessee, Northern Georgia market. So tell me, what's the value of investors follow the migration trend, get in early in the market, get in before the mainstream media will promote this area. Right now is, is under the radar. Right now is, not known, but that's the beauty of it, right? You get ahead of the curve, get in before everybody find out about it. Because if everybody, if the mainstream media find out about it, it's too late. So go ahead, Maureen, now is your turn. Oh.
I like your big picture thinking, actually. I mean, you know what? I haven't really thought about 10 years from now. I didn't really think about a second migration wave until you brought it up on the last call. And I'm going to synthesize 3 pieces of data together, which is because I did look up the U-Haul migration report for 2021. I remember 2020, it was Tennessee overtook Texas and Florida, but they're always in the top 3. They're just jockeying for which is going to come in the pole position 1, 2, or 3, but it's always the 3. The majority of people are leaving big states like New York and California. They're looking for affordability. Now, people from New York and California, they can afford places like Nashville and Austin. Because they can take the capital that they're making from the sale of their very expensive homes and parlaying that into other expensive areas, not affordable to maybe some others, but affordable for them, and still put them way ahead in the money game. So, but there's I think you make a really, really good point. And especially when I think about the results of the U-Haul migration trend of 2021, when you were on that map, I loved it. I almost wanted to kind of interject there, but I wasn't going to steal your thunder. The main areas that are growing are, if you looked at that map, it's Texas is here, Florida's here, Tennessee. So Birmingham or Alabama, Georgia are engulfed or surrounded. There you go. Thank you for that. So, you've got your, Texas, Tennessee, Florida. Everything that's in the middle of that is so very affordable. Even new home construction, at call it $200,000 to $250,000, you can buy a brand new home in Alabama for $250,000. The median home price across the United States right now has crossed for the very first time over $400,000. That really puts a lot of people out of the buying game. And if rents keep escalating as they are, then it really puts a pinch on these families that maybe were locals, like you were saying, and then maybe have to move 200 or 300 miles away because they still want to be close to family, but they also need affordability for their family. So I really do think you have a really good viewpoint and vantage point that there will be a second wave of migration. People will be looking for a better quality of life. And that doesn't leave too many places on the map to be able to go to. And if you already, we can see from that U-Haul migration, in the top 10 was North Carolina, South Carolina, Florida, Texas, Tennessee, Alabama was in there, but it was in the 20th spot. It wasn't really in the top 10. But Knoxville and Nashville have grown like crazy. And so it's just a matter, I mean, Nashville's here, Knoxville's here, Huntsville's here. They're all just kind of converging together. So I do think we're going to see a second wave of migration. I do think you're right with being ahead of the curve versus being behind it, because anytime you are first to market or first in an emerging market, you're in at a lower cost. You get to ride the equity wave over time as the area becomes more popular and more densely populated. And so I think we need to play this video a year from now to see what if that second wave of migration that you're talking about, and that I firmly agree with you. I do think that it's happening because affordability and quality of life is a big deal. And it's just those other markets that are just growing so fast and exponentially that are just pricing people out. So they're going to find solutions. We'll have to.
Yeah. One quick comment I want to make. We only have 5 minutes left. I wish we always have time, but one specific market within this region I really like is Huntsville. I've been there a long time ago. I ran a road race almost 40 years ago in Huntsville, Alabama. Well, I still have a picture of it. Maybe you saw. Anyway, yeah, Huntsville is a rocket city. Is like space program. The government is there. The space program is there. The new Space Force, a new military branch of Space Force. One of the headquarters is located in Huntsville, Alabama. It always has been a rocket city for many years. And the prices there are relatively low, like 150 to 200 grand for investors, but prices are rising. So Birmingham, very stable market, Birmingham and Tuscaloosa and Chattanooga, Tennessee is really good too in northern Georgia. Even your area, even though I'm calling second wave, this region, the prices are rising because even in your area, there is a record low inventory and still very high demand, even in Alabama and Tennessee as we speak, right?
Yeah.
So real estate moves so fast that we need to make decision quickly. As a real estate investor, you really need to do some more research. If you want to maximize, if you want to scale your real estate portfolio, and if you want better cash flow, better return, then it behooves you to look into this region, Alabama, Tennessee market, because you're getting soon, you will reap the benefit. And quickly, for a few minutes I have, here are some of the inventory you have available. Very nice price point. I mean, what else can you get in this good area? A single family home, only like 115K, 125K, 145K. A new construction, only like 250, new construction, single family home. And then you have a mixture of a duplex for only 325K, good cash flow, and so forth. So, it's a great portfolio acquisition building for many investors from out of state in California, wherever they're from, Northeast. This could be the target. So with your final recap, so for the next 30 seconds before we conclude, what are your takeaway?
Takeaway is don't wait to buy real estate. Buy real estate and wait. That's a cliche. It's a statement that's been in the industry. It'll serve you in the long run, because we are definitely in a housing shortage for sure, and it's going to take us a while to get out. And affordability is key. If you can get into an emerging market before it becomes on the hot list, the hot market to invest list, then you guys are just placing yourself in a better position for wealth building, from that particular point forward. So your starting point matters. It doesn't matter when you get into the game, but it really does matter for a higher rate of return, higher cash flow, is if you get into an emerging market before everyone else knows about it.
Exactly. One quick note, okay? Right now we're going through very challenging times. The interest rate has skyrocketed, 5% or something for owner-occupied buyers. For investors, is in the high fives or even 6%. But bear in mind, it's not a major blow for investors. It's not a red flag, because if you look If you buy a lower price investment home, like we just shown you, 100 to 200,000 price range, a 6%, even a 5.5% interest rate, 30-year fixed for investor, you can still cash flow. Not as much as last year or the year before, but that should not be a deal breaker, right? Because as a risk investor, you can adapt. What if you lock in the 5.5% 30-year fixed interest rate to buy one of these rental properties at 20% down, 25% down? Yeah, your cash flow right now is not going to be that high. Maybe $100, $200 monthly cash flow, at least positive cash flow, right? Better than nothing. So, and then if we don't know the future, if a year from now, if interest rate goes back down to 4% or 3.5%, maybe as an investor, you can refinance your loan. So as a risk investor, you have so many ways to adjust and adapt to changing environment. That's the beauty of entering this game, investment game. So that's all I have to say. Thank you so much, everyone. Hopefully this helps, and just take action. And that's it. That's all I have to say. Take action.
Just do it.
Yeah, Nike, just do it.
Just do it.
All right. Thank you so much, everyone. Bye-bye. Have a nice day.
Bye.